Hey all, welcome back to the Brent Bruce Daily. Today is September the 12th, 2022. It is now about 2 o'clock Central Time, and I am out in the field here visiting a couple of properties, visiting with a couple of my agent partners and some other people in the community, in the business world. Wanted to make sure to give you an update here before it got too late in the day. So, this morning we woke up, the mortgage-backed security market was kind of feeling a little bit better today. Was up about 20 basis points on the mortgage-backed security, but there was a 10-year bond auction that came out and didn't go very well. Now, why does a bond auction not go well? Well, so if you look at the 10-year that we look at, really we look at it every day when we're pulling up the Brent Bruce Daily, we're sitting at a return of about 3.3% on the 10-year treasury. Well, if someone looks at that and says, hey, that's just not the return that I want to get on my money today, taking into consideration where inflation is. And that's where inflation comes into the picture, is why would you want a 3.5 or 3.2% rate of return when inflation is 8 or 9 or more than that? Well, you have to have a real good expectation that inflation is going to come down dramatically so that the time that you're holding that asset, you end up having made a good investment and having a return greater than inflation at some point. So they're basically not seeing that at this point. That bond auction actually rendered a D rating out of like an A, B, C, D rating. It was a D rating, which was not good. So the mortgage-backed security world did not like that, and we sold off. So we went from being up 20 to right now I think we're down about 19 on the mortgage-backed security market. Now, what does that do to our interest rates? Overall, the Brent Bruce Daily scenario that we look at each day is sitting about the same as it was on Friday, about a 5.875 with about a 5.972 APR on a very well qualified 30-year fixed conventional mortgage. What we're waiting for now is that tomorrow we're going to get the consumer price index number for the month of August. Now, last month it came in at 8.5 on the headline number, and we want to see that number come in lower. We want inflation to go down. If we start to see a number that is less than 8.5 on the headline number, and that's the year over year number, then that's going to be good for mortgage-backed securities. If we see a month over month number that is less than 0.1, that is going to be good for mortgage-backed securities because that will show a reduction in inflation. The expectation right now is that we will have a month-over-month reading of negative 0.1, and that we will have an annual reading, a core reading of 8.1. That it's going to go from 8.5 to 8.1. So when those numbers come out tomorrow and you see on the news and it says, hey, guess what? The inflation reading came out, the consumer price index, and inflation is showing to be now at 7.9. Well, that would be a great thing because the mortgage-backed security world will like to see that inflation came in cooler than even expectations. Now, if it comes in at 8.5, higher than that, that means inflation is up, and the mortgage-backed security world will not like that. I will be sure to keep you posted. Overall flat from about Friday. We'll see what our consumer price index number looks like. I will catch up with you again tomorrow. Thank you.